How's it going, traders? It's the Pup of Wall Street back with another weekend review. Today we're going to look at my top sectors going into next week. If you enjoy my content, make sure to like this video and subscribe to my channel below. These two actions will help more people see my work. Also, if you don't forget, hit the notification bell so you know when my videos come out. And if you have any questions, please leave a comment down below. Let me know what you think about these chart videos. And lastly, keep in mind, this is not financial advice. I'm only doing this for educational purposes only. Now, let's dig into the charts. So first up, we're looking at the Dow Jones Industrial Average, DIA. And you can see we're still in a falling wedge. Thursday, Friday, we struggled at 314.60, which is our 50% retracement level. I think the level to watch is going to be 318.89. We have a fib cluster of a 382 and a 618 retracement there. We also have a declining 50 simple moving average right there as well. So if we could break above that level, then 325 would be the level to watch above. Next up is SPY, and you could see here on Thursday and Friday, also stopped at 393. But this has been a nice 6-day rally to the upside. You could see 2 weeks ago, we did struggle at that 393 level. So what I'd watch for this week, if we can break above 393, then 397 and 400 would be my next targets to the upside. Next up are the Qs. You could see the Qs stopped right at that 50 simple moving average on Friday. So very clear, if we can break above that 50 simple moving average, then 300 and then 309 would be my targets to the upside. RSI is also breaking out here. Moving right along, we have IWM. So with IWM, we haven't quite tested the 50 simple moving average yet. So that's what I would watch for if we continue to see the market climb this week. Watch for a move back up to 176.92. If we could break above that level, then we should test that declining 50 simple moving average. And then above that, it looks like we have some gaps above. Let me throw my gap detector on. Yeah, actually this gap was closed, but we have a gap that's not really showing up right here. So what I'm going to do is I'm going to make this a little more sensitive. And there's our gap right there. So we do have this gap. So over the 50 simple moving average, I would watch for a potential gap fill up to 180, 150 to 183. Okay, so next up is the dollar index. This one always looks much better when you go up to the weekly chart. I think this really illustrates the type of breakout that we're getting on the dollar index. Dollar very strong right now, which generally is not good for the stock market. So we are potentially coming up to 108.166, which is our 1272 extension from the prior swing high, swing low. So watch for potential resistance off this 108.166 level, potentially getting tested this coming week. So that's enough of the major indices. Now let's take a look at some of the sector ETFs that have been performing pretty well. So here is your retail ETF, IBUY. And again, these are not in any particular order. They're only in alphabetical order, so not certainly in any order of importance. But you see we are trading below our 50 and 200 simple moving averages here on the weekly. Let's go up actually to the daily chart here. And so here you have a declining 50 simple moving average, but we've been consolidating for a couple of weeks now. We've actually been, in a bit of a range, I would say since late April, early May. So really what I would be watching for is a move over $50, basically 50.03. First we could watch for a move over that 50 simple moving average, but really I want to see a move over 50. If we get a move over 50, these are the names that I would be watching. Your Bookings Holdings, Expedia, Airbnb, TripAdvisor, Amazon. Those are the types of names that I would be watching for. And these are in the order of top holdings. So the higher this is listed, the more heavily weighted it is in this index. Okay, going up to our next sector, this is ICLN, or Clean Energy. You think about ENPH, PLUG, NEE, SEDG. You can see we're coming to the apex of our wedge here. So you have the wedge high, wedge low, and it's really coiling. So we potentially could coil for the rest of this week, but at a certain point, it's going to have to either break out or break down. If we break out, I would expect a test of the 200 simple moving average. If we break down, I would expect a test of the 50 simple moving average. But for now, we are trading in between these key moving averages. Next up is KWEB. This is your Chinese tech. And you can see we moved over that 50 simple moving average here. We actually gapped over it and had a nice run up to my first or second target at 33.84. Came back and came close to back testing that 50, but then started to bounce prior, came right back into that 33.84 level and failed. And now we're back down to my first target of 31.64. So we may need to consolidate a little more between these two levels, but once we start to see daily closes over 33.84, we should test the 200 simple moving average. That's starting to look like it's flattening out. And then any break above there, I would be targeting 38.83 and then 43.37 to the upside. Next up is TAN. So this one is our Solar ETF tracker. And you can see a cup and handle setup. Beautiful move back off of the 50 simple moving average back to the 200. This has acted as resistance, in these two prior areas, and now we're getting a daily close on Friday over it. So I think a break over 78.65, I would certainly keep an eye on, ENPH and some of your other solar names. They should be moving off of this, and any moves over 78.65, I would be targeting 84.08 to the upside. Next up is SKYY. This is your cloud computing ETF. So CrowdStrike, Zscaler, Okta, and the rest of these names. And you can see here on Thursday, we broke over our 50 simple moving average. Friday, we did have a green day, but a little bit of an indecisive candle. So what I'm watching for next is over 73.82. You can see that acted as resistance back here a few weeks ago. Over that level, 75.38 and 77.61 to the upside. That should bring us right to the downtrend line that we're seeing right here from our prior highs. Then any moves over that downtrend line, my first target would be 81.41 to the upside. Next up is XBI. So these are your biotech names. So NTLA, mRNA, CYTK. These names have really been moving well over the last 2 to 3 weeks. You could see off of the bottom here, we had a nice run into the 50 simple moving average. We broke out, we came, we back tested, we bounced higher, we broke through the downtrend line, and we came and tested this fib cluster at 83.64 to 83.66. We broke over that on Friday, so I'm watching my next move to $89 to $90. You can see that is a bit of a supply zone up above, but it's looking like we should move to that level. Should we, if we hold 83.64. So that is the review of the sectors that I'm watching going into next week. Biotech and solar names have really been the strongest. One thing I would mention we should probably keep an eye on next week are the financial names. You could look at XLF. That's going to be your financial ETF. We start earnings season on Thursday. So Thursday and Friday, I think you have, Thursday morning is JP Morgan and Morgan Stanley. I think they report Thursday before the market open. And that's really going to kick off the earnings season for us. So buckle up. It should be an interesting season. And let's see where the market wants to lead us next. So take care, everybody. Have a great one. And keep an eye out for my next video, which will be on the momentum stocks. Take care, everyone.